We want a cashless society. It costs us $5 billion for checks and cash to move around our company.
You want a cashless society.
We are driving towards a faster, but we have more to gain than anybody in a sense from a pure operating cost, and so we're driving it.
The digital RMB. Can you imagine like the rest of the world start trading, using this currency instead of U.S. dollar?
Interesting. Okay.
And the sooner to you be able to sort of enable the world be able to transact. Why am I still paying $15, $45 to wire transfer from San Francisco to Hong Kong if I can just peer-to-peer, of course, with full-blown KYC, AML, but basically cut down that time to seconds and super zero costs.
Give a type of money that can only be spent for a specific number of reasons. And some worry about that state control or whatever, but like in this particular narrow use case, you want to give checks to individuals to get the economy moving again.
Yeah.
So if you think of programmable money that expires if you don't spend it.
Yeah, I mean, I think this hype cycle might be different, right? This is the first time where you're seeing large institutions like BlackRock, like Van Eck. Just the other day, Visa announced a stablecoin tokenization platform for banks to create stablecoins and launching that with BBVA. Similarly, I think a lot of that is driven by the fact that the technology has been battle tested, right? Stablecoins are going to settle over $24 trillion this year. All-time supply sits at around, or current supply sits around all-time highs at $170 billion. So it's hard to ignore this, especially when you look at the innovation that stablecoins create. Right now, you can take dollars, upload them onto Coinbase, send them anywhere in the world at the speed of a text message for free. And then that user can take that stablecoin from their wallet and deposit it directly to the bank account. So I think Wall Street and large institutions look at this and say, this is the future, especially when you consider the existing legacy rails. And most of fintech are just very thin layers that sit on top of legacy banking or financial system. Stablecoins take all those middlemen that charge excessive fees, that create slow settlement times, and replace them with software. And so I think you're going to see a lot of institutions start to leverage this. And tokenization for us really just builds upon the formation that stablecoins have already enabled. And now you can create net new assets and markets that were previously illiquid or hard to access. So I think it's going to create a Cambrian explosion of new fintech products over the next decade. Yeah, thanks for having me on, Jordan. Very excited to tell you more about Van Eck Ventures. Yeah, I mean, we see ourselves as a fintech fund first and foremost at the intersection of crypto and AI. Crypto is really the value layer, and stablecoins to us are very core to that thesis. AI is where you can take financial services that are typically represented by people and now turn those into software. So we're kind of assuming that a lot of the underlying technology here, whether it be the L1 blockchains or the large language models, have been commoditized to a point where now middleware and applications can leverage these primitives really to redesign and create kind of a net new internet-native financial system.
The latest report from the nonpartisan Congressional Budget Office, 2024's federal budget deficit has now hit $1.8 trillion. That's with a T. It's the highest level in 3 years. We're getting this news as economists try to parse the presidential candidates' plans to see how much they would add or maybe hopefully subtract at some point. But I don't think this is part of it, the deficit and debt. Joining us right now, House Budget Committee Chairman Jody Arrington. Good morning to you.
Good morning, Andrew.
So $6 billion a day is the cost.
Unsustainable. At some point, we're going to run out of other people's money, and the people we're borrowing from, some of our foreign creditors like Japan and China, by the way, will stop loaning us money to pay for an ever-growing government where we have almost $2 trillion in an annual deficit. If you look over 10 years, we're going to add over $20 trillion to the national debt. We're paying over 50 cents on every dollar just to service the debt. That's more than we spend on all of national defense. That cost is almost $1 trillion. That's more than we're spending on Medicare now. Mm-hmm. So the wheels are coming off the wagon, and we have to have a plan to reduce our spending, stabilize the debt by just growing faster than we're spending, and getting back to economic growth.
This would have been a good year to do it because revenue was up 11%.
Yeah, we've seen record revenue, by the way, ever since
corporate revenue up 26%, but spending was up 11%.
Great. There's a great
chart on the front of the Wall Street Journal.
Yeah, look, if we
you
grow
see that chart.
1%.
We've just been outspending every single year.
Yeah, we have. But look, the foundation's always going to be growth. We had over 3% GDP prior to COVID. And if we grow 1% over what CBO projects, the 10-year annual GDP average, which is 2%, paltry 2%, then we will reduce the deficit by $3 trillion. We'll bring the debt.
But let's talk about how do we grow and are we actually going to have a real conversation about cutting? Because I was going to say, in terms of cutting spending, neither candidate on the presidential end of things and very few in the Senate and Congress seem to be talking about cutting anything ever.
Yeah, well, I think there are two myths on each side of the equation politically. One party thinks that you can tax your way out of this deficit hole, and you can't. You'll run out of other people's money, as Margaret Thatcher says, and you'll destroy the economy, quite frankly. That this is the worst time to consider adding taxes on our job creators or our families suffering with the worst and most regressive tax of inflation. At the same time, there's a myth on the Republican side that we can just grow out of this $2 trillion, soon to double in the next 10 years, et cetera, about $130 trillion over the next 30 years. Won't happen. We won't get there if we don't rein in spending.
You can look at,
so we have to combine the cuts.
Right. But nobody wants to have the cut conversation.
No, I do.
If I said to you, where do you cut?
Oh, listen, let's start with unspent billions of dollars of COVID. Let's start with tens of billions in funding for illegal
immigrants. Where is that money,
immigrants.
by the way? So there's, you read these headlines that say there's $200 billion or all this money from COVID that's been unspent. Where is that money?
It's like the monies we're spending on illegal immigrants. It's housing, it's health care, it's welfare.
But it's spent or it's unspent? People say this is like the COVID money is unspent.
It's appropriated but not spent. And listen, it's just billions, but there are tens of billions in spending. In fact, it's $9,000 per illegal immigrant. In fact, CBO just did a report, $16 billion on Medicaid spending. This was just last week for people here illegally. And I could go through a list.
There are, I should say.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And the next run that we get is going to be a utility run. Because 25 to 28, we're going to start to see liquidity shrink. Because we're going to get closer and closer to real-time settlement. Everything's going to be tokenized and put on blockchain. And we know stable coins and CBDCs keep the central banks in control because they're nothing but digital dollars, but due to smart contracts, you can program them, telling you what, when, when, and how to buy, and you have 3 to 6 months to spend it or poof, it's gone. And guys, we know that is biblical. And with the power of AI, this brings the machines alive where they will be able to replace the people. Robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And we have the deficit definitely is going to get cut. We're moving over to the level playing field, and we see fiat currencies done, and we definitely know the United States world reserve currency is coming to an end. Yes, the dollar is still going to have power. That's the reason why they're trying to tokenize these treasuries. But the United States dollar is going to lose power because it's going to lose that world reserve currency title. And we have Rahm Emanuel, ambassador of Japan. If you have my NWO book, you definitely understand. But he's giving you the blueprint of the fourth industrial revolution. And we know he's the ambassador of Japan for a reason. Remember, the leaders of Japan came to San Francisco and planned out the fourth industrial revolution. And I'll let you hear it out the horse's mouth. They came to plan out the robots, algorithms, and drones. And Rahm Emanuel, we know, is a war hawk. And he states they're going to be doing the same thing like the Cold War, isolating China. But guys, we know all about Belt and Road. We know he's playing nothing but the Hegelian dialectic because China is definitely not isolated. But we see the United States is, but we know that's all part of the plan. And remember, the Crypto Teacher told you. And we had Fed minutes out. And one thing they agreed upon is lowering interest rates. And we know Japan is going to be raising interest rates. And that's going to cause a rumble in the economy, causing a currency war, putting us in a level playing field. And then we know the drums get to beating, and we get the second major hurricane. And if you understand the narrative of the media, FEMA is being attacked. Why is it being attacked, guys? Because we know the legacy market has to be destroyed so the fourth industrial revolution can rise. And while we're having these hurricanes, we're seeing all this technology moving in. And of course, if these people had wallets, they could have just airdropped them stable coins. We saw the government do this on several occasions while the drums were beaten. And remember, the crypto teacher told you, it's all about pushing adoption. And then we have Roblox, not safe for kids. They want to do safeguards. And guys, we know we went through a whole 3 decades with no type of safeguards for kids because they wanted engineering. Engineering for the last 3 decades, of course, those kids are going to have kids, and now those are the millennials, Generation Z. But the reason why they want safeguards now is because they know that Metaverse is coming. Remember, guys, when the internet first started, what blew the internet up? I don't need to tell you. We all know. So just imagine what's going to happen in that Metaverse. You have to have safeguards up because remember, you can be anything you want to be. At least that's what they want you to think. But you heard from Ray Kurzweil. They want this world to be put into the virtual world. They want you in a real-life video game. And remember, the crypto teacher told you. Because he knows, when it comes to the NWO, it's all planned out. You have a wonderful day.
That's in today's Wall Street Journal. U.S. Ambassador to Japan, Rahm Emanuel, actually joins us this morning to talk about it right now. And Ambassador, thank you very much for being here. China is front and center on our minds. We spend a lot of time talking about it in relation to what we've seen with their economic policies and most recently with their stimulus that's been boosting the stock markets until today. But what you lay out is a very real way of looking at diplomacy and how we deal with them. How would you describe this entire thought process?
Well, mainly a couple thrusts here, which is one on the political. You try to always look at what your, I would say, opposition or opponent, in this case China, is doing, and then flipping it and making what is considered a strength by them a weakness. Their attempt is to isolate country A, Philippines, Australia, etc., using coercion or the mercantilism. Our strategy is to isolate the isolator. And that is what we've done on the diplomatic side. President Biden with the trilats between Korea, Japan, and the United States, or on the Philippine front. We've done it on the security, multilateral, going from this hub and spoke to a more lattice work, multilateral approach. But to be most effective, you need to bring the economic statecraft in line with that strategy. And they're actually giving us huge opportunities. And Australia showed, as I laid out, how to beat back the coercion. It was through expanding trade, expanding economic opportunities to other countries, to the point that China just threw in the towel. That is also how Lithuania did it with the EU. So that example you apply not only on the coercion front, but Chile just had to close their steel plant because of a massive dumping of cheap steel by China. That's going to give us a huge opportunity into the developing economic world where the United States could be a center of kind of an economic system where their industry, whether that's on the steel side or on the higher end, on the EV side, is protected. So we need to bring our economic statecraft in line strategically. So what you're doing diplomatically, what you're doing from a security standpoint, and what you're doing from an economic point as a single strategic effort of deterrence. That is what we did during the Cold War. Now it has to be applied here.
How has China reacted to this partnership that's kind of built up from the hub and spoke situation to being pushed back? You mentioned the situation with Canberra when they spoke out about China and wanting to know the origins of what really happened with COVID. How does China react to Australia then turning around and saying, OK, we have all these other trade partners instead?
Well, I think the proof is after 3 years of really trying to isolate Australia and also Australia maximizing economic opportunities and economic markets in other countries, China threw in the towel. It's exactly what happened with Lithuania and the EU protecting. We need to be the center of gravity on this anti-coercion operation. The last G7 that was held here in May, that May of the other year, that actually, for the first time in G7 communique, talked about coercion. But you have to have a strategy, an alignment, be able to identify what coercion is. I would argue what Russia did to Europe on using energy, that's a form of economic coercion. What we're doing here, go ahead.
Go ahead.
Well, so my view is economic coercion is one piece. The mercantilism, which is where you destroy other countries' industrial base, is another form of their economic kind of warfare. And then using debt trap to literally also take a country's sovereignty away from them or take their infrastructure national projects away from them. And all of that, while China sees it as a strength, is actually their vulnerability. And you need to apply the same strategy of literally using multi-layered, lattice-like work, multinational efforts, where China becomes the isolated party because their tactics is offensive economically, politically, and security-wise to every country. Just think about the last week. They were in confrontation with Vietnam fishing boats in the South China Sea. Same thing with the Philippines. They were just in Japan's EEZ, but also their space and on the coastal areas off of islands. They're doing this all the time to countries, and the United States has to have a comprehensive, integrated approach where our strategy on the political, diplomatic, as well as security and economic front is collaborative and cooperative and of the same vein.
Let me show you first where they agreed. All participants agreed it was appropriate to ease. They judged it was appropriate to continue the process of reducing the funds rate. And if the economy evolved as expected, they said it was appropriate to move to a more neutral policy stance. Most saw policy as restrictive. They disagreed, however, over how restrictive to be. A substantial majority, it says, supported lowering the funds rate by 50 basis points. However, it did not say how many or what, but a substantial majority wanted the 50. Recalibrating policy, they said, would bring it into better alignment with the inflation and labor markets. Some, however, would have preferred 25, and a few others said they could have supported 25. So some plus a few, we don't know how many that is, but it was more than just the one dissent is what we're learning that supported just 25. Several noted that 25 would be in line with a gradual path of policy normalization. A few noted 25 would be more predictable. Now, on the economy, some worried there was differences here that probably reflected the differences over 25 or 50. Some worried that the easing in the labor market could transition, quote, to a more serious deterioration. Many saw the economy growing at trend over the next few years, and almost all saw diminished risk to inflation and downside risk to employment. Several worried about consumer spending from cooling of the labor market. Some were concerned the pace of hiring was not strong enough to keep the unemployment rate from rising. So this was all before that recent September employment report that we got in October, but so there was a lot of concern about the job market. Further labor market cooling was not needed to get to the 2% inflation target, and a couple people were concerned about upside inflation risk from geopolitical events, very much the way we heard this morning from Dallas Fed President Lori Logan. So guys, back to you.
Been bringing resources in and personnel to help support the ongoing efforts. We will continue to move people in. We're starting to see a lot of progress in certain areas, but there are definitely some parts of Appalachia that have been significantly hit. And it'll be a while before we can get the water and the power restored in a few of those areas.
It's been 2 weeks, and there has been an outpouring of frustration that has played out on social media. In some cases, people saying that FEMA hasn't been there, that they haven't been there to support them. In other cases, saying that they've actually, federal authorities have actually turned away local volunteers who are trying to help. What do you say to all of that pushback out there?
Yeah, it's unfortunate that we're still having this conversation. It's a false narrative, and it's just a distraction to what we're doing here on the ground. Just because you don't see somebody in a FEMA shirt walking around a community doesn't mean FEMA's not there. Much of the water and food that's been delivered into these communities came from our warehouses. We have experts from the Army Corps of Engineers and the Department of Defense that are on the ground helping out in these communities. And we've had staff embedded at the state EOC, side by side with the state, so we understand what their needs are and we can meet those needs and get the right resources in place. And so we've been on the ground since before the storm passed through Appalachia. We are still here, and we will be here as long as we are needed to meet all of the needs of these communities.
You up to speed on this Roblox story? We read it yesterday and couldn't believe some of the stuff we were reading.
Well, I think there needs to be regulation. I mean, you've got hundreds of millions of kids on these platforms. I had moms in my office who had lost children because of the choking challenge online, because they're getting fentanyl online. Here, of course, you've got these video games where kids are being preyed on. There's a Kids Online Safety Act. There are only 15 members of Congress on the House who are on that bill. We've got to pass that. The Senate wants to pass it.
Why is that so hard to pass? I don't understand that.
Well, this is where I do think, there's partly the lobbying that the New Yorker article mentioned. But if the guy from Silicon Valley, who's not reflexively about breaking companies up, can say, let's protect our kids, let's get the Kids Online Safety Act passed. All it says is age verification. You've got a standard to protect children. You have to make sure that you're protecting against predators.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told told his members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.